Hi guys, hope everyone's safe and well. In this video, I'll cover off the weekly performance of the portfolio for the week commencing 12th of April. I'll also run through what's causing some drawdown on the portfolio, the specific sector that's causing some drawdown, and do a bit of a deep dive into that, and also discuss some personal news, which is good for my future trading on Etoro. As always, please remember that the contents of this video are my opinions only and should not be considered as financial advice. So I'll quickly cover off the major indices performance for the week just gone, and also the month to date so far. So the S&P has had a fairly strong week, so it's up 1.37%, and it's up just under 7% for the month. The Nasdaq had a fairly solid week as well, so that's up 1.09% for the week and 6.33% for the month. If we compare that to ours, so we're actually this week we're actually down 1.67%, which means that for the month we're down 1.55%. I'll cover off why that is shortly, but we're still 13.40% up for the year to date. The target, or the annual target, is about 20%. So you know, we're well on track for that at the moment. We'd like to have a green month every month. You know, if it works out like that, great. If it doesn't, not too concerned. You know, certain sectors will go up and down, and that might pull the portfolio in a stronger direction at any one time. So in the long run, I'm aiming to reach that 20% target at least, and hopefully outperform the major indices as we go. So still outperforming both the S&P 500 and the Nasdaq year to date, even though we've had a bit of a slower month this month. Before I jump into a portfolio breakdown, I just wanted to share some personal news, which I did actually post on my my Etoro profile last week. And that news is that basically I've passed my level 3 certification in wealth and investment management by the CISI, Chartered Institute for Securities and Investment. So this is a qualification that is required by Etoro PIs when they reach elite level. I'm currently at cadet level, which is the entry level for a PI. So I originally became a popular investor back in September 2020. So I've not been doing it too long, even though I've been on the platform for quite a while. I only joined the Popular Investor Program last September. So as you can see by the requirements at the bottom here, so when you reach elite level, and an elite level is you need to be managing at least $500,000 AUM. You know, you need at least $25,000 in equity. So even though I'm cadet level at the moment, I sort of took it upon myself, you know, as a sign of where I anticipate my my sort of Etoro career going. I took it on myself to do the study and take the qualification in the wealth and investment management course, which I'm pleased to say I've passed. So you know, I've got my eye on becoming an elite popular investor in the future. I've mentioned in a couple of my videos that my target for the end of this year is to have 50 copiers. At the moment, I've got 14, so you know, we're moving in the right direction. But hopefully, this is a show of sort of confidence for potential copiers that I take this very seriously. And I've got a professional accreditation to match my many years of experience now. So yeah, it was nice to get that one done. And we move forward with that. So I'll quickly jump into a portfolio breakdown. And I'm not sure if you're going to be able to fully see this because it might cover some of the screen. But basically, there's a really good tool that has been developed by one of the PIs on Etoro. So Felipe, this is a bit of a shout out to him. He's created this basically this asset breakdown tool, which anyone can use. It's free to use. There's a link on his page, and essentially what you do is you put in the trader's name, and it will load their portfolio, and it will give you a sort of a sector breakdown, an asset breakdown, a breakdown by geography. I'm just going to slightly make this screen smaller just so you can see. Hopefully you can see that a bit better. Yeah, so it's just a really useful tool, so I'd highly recommend it. But it gives you an idea. If I just quickly sort of scoot through the breakdown of the portfolio. So we're currently 25% in tech, just under 13% in healthcare, just under 12% in industrials. We've got some communication services, consumer cyclical, financial services, energy, basic materials, some cash, which we always like to keep some cash in hand, some utilities, consumer defensive, and then there's some sort of miscellaneous ones in there. So we're quite well diversified. If we go to the geography breakdown, and this is what will lead me on to explaining why we've had some quite significant drawback or drawdown this month compared to the major indices. So the main bulk of our stocks reside in the US or are listed in the US stock exchanges. So 37%. And the next biggest exposure is to China, which is basically why it sort of kept us or held the portfolio back this month compared to the major indices. So if we were to sort of compare or show the performance of CQQQ, which I'll quickly explain what CQQQ is. So CQQQ is a Chinese technology ETF. So it holds all of the main sort of Chinese tech companies. And it gives a quite good indication of what's been happening. So as you can see, sort of last year or to the beginning of this year, a lot of the Chinese tech stocks had a huge run up, and then there's been a sharp sell off this year for a few different reasons. Obviously, the risks and fear around bond yields and inflation has affected growth stocks, and a lot of the companies that fall into, or the Chinese tech companies fall into that category as growth stocks. So there was that risk that has impacted them. There's also been a lot of sort of regulation clampdowns and antitrust regulations being pursued by or being rolled out by the Chinese government. There's a sort of a quite well documented case on Alibaba, which I think they've just settled for sort of I think it was 2.5 or 3 billion. So yeah, in short, there's a lot of regulation coming in China, which is sort of spooking some investors because they don't know how some of the Chinese stocks are going to be impacted. Even though that the Chinese economy has been growing, and last year it did grow considerably compared to a lot of other countries, which is probably one of the reasons why there was this sort of big pile in the lead up to this year. There has been quite a lot of headwinds, but mainly sort of fears rather than actually reasons to panic, if that makes sense. And then there was also the sell-off in some of the tech stocks or Chinese tech stocks like Baidu and a couple of the others when Archegos capital got margin called. So there was sort of an added impact from that. So basically that's essentially, if I go back to this sheet, essentially sort of put a bit of a drag on our portfolio because we do have quite a lot of exposure to Chinese tech. So we've got, if we quickly go to what we've got, we've got companies like Qdian, Baidu, which are in the sort of CQQ there that we've just covered. Momo is another one that we've got, which is in the portfolio. Kingsoft. So we do have quite a lot of exposure to Chinese tech stocks, which is why there has been a bit of drawdown. Now, it looks like if we're just looking at this chart here, it looks like we might be seeing a slight recovery and a bit of confidence returning into this sector. I'm not concerned. So for me, I'm happy to hold a lot of the companies that I've got. I still think there's fantastic potential in a lot of these companies that we're holding, well, in all of them, in fact, otherwise I wouldn't have invested in them. So, you know, you have to ride out storms like this, but I'm happy to hold them. I probably won't be adding to any positions at the moment, even though some of them are quite looking quite attractive, purely from a risk perspective. I don't want to overexpose myself, and you know, risk pushing up my risk score. So, you know, we've got a lot of exposure. If we go back, we've got a lot of exposure to Chinese technology and some other Chinese industrials as well. So I'm happy to just sort of hold them, even though they may drop. You know, like this one, Douyu, currently 23%. Quotal 22% down. Again, there's a couple, Alibaba Health, but these ones I'm just happy to hold on to. So I do think we'll see a bit of a recovery. I'd imagine in the next month or two, which hopefully should put up the portfolio. But outside of that, you know, we've still got exposure to, as you can see from the chart that I shared here, we've got exposure to a lot of other sectors. Energy is another one which has sort of pulled us back slightly. We did jump in over the last couple of weeks in a lot of positions in green energy because there's been a lot of sort of selling off on those sectors. But again, happy to jump in and hold these ones. I think they've got fantastic potential. If we go back, if I just show you what ones I'm talking about. So, I mean, some of them, we've actually dived in and out of a couple of positions. So Canadian Solar, we've jumped in and out of a couple of times. We've opened another position on that. That's already 2% up. I just think ones like Canadian Solar, Sunrun, Nova, another sort of solar energy company. I think these ones will do well, especially as need for energy increases, you know, towards the end of the year when things start to open up and more energy consumption increases. So I think those will increase. So again, happy to hold those. From a sort of trading or activity on the portfolio week, it's been fairly quiet. We didn't actually close or open any new trades or close any existing trades. We've kept some cash in hand. So we should have about, I think we've got about 2% cash in hand, 2.87%. Yeah, so I'm really sort of happy with how the portfolio is positioned at the moment, even though, you know, we'd like to be further ahead for the month, currently down 1.55%. I think we're quite well positioned. So I'm happy to hold a bit of cash. There are opportunities that are tempting, but I want to sort of keep a little bit of cash in hand just in case. So yeah, in short, happy with how we're going. We'll continue to hold the positions in Chinese technology stocks and green energy, and yeah, let's hopefully have a good sort of final couple of weeks